we're going to talk about inflation. People say inflation all the time. It's so ambiguous. I don't think I really got it until the past probably 3 or 4 years. And you'll hear about it all the time, and it's really hard to get your head around. Here's a couple of things. The technical definition is the increase in the price of a set of goods and services in a given economy over a period of time. I don't know really what that means. It came from some college textbook, I think. It's also, they measure it, and it's called the Consumer Price Index. Another thing, we just don't know what that is either. Except for people that are really into watching Bloomberg News in the morning. Anyone? I didn't think so. So, it also says that to avoid losing the buying power of your money. Buying power of your money? I don't know. I buy things with my money. I don't know what that means, buying power of my money. Isn't it weird to say buying power and you just can't get your head around it, can you? So, inflation, all you need to know, first of all, is it's your wealth enemy, next to taxes. Here's a good example of how inflation works. 40 years ago, bread was about 25 cents, plus or minus whatever, depending on what kind of bread you were buying. A car, brand new, could cost you $3,000. A home might cost you $20,000, maybe a little bit more. And you could retire if you had $40,000 and a little bit of Social Security, you could get by in retirement without moving in with your kids. Now, what is it today? What are the numbers today? Today, bread's about $2.50, maybe more now because I know food's going up even faster. This was only last year, unfortunately. It was $2.50. Now, $3. $25,000 for a car. $250,000 for a house. These are all average. $40,000 or $400,000 if you have that much money, which is what my uncle had. He had $400,000 in Social Security, and he's been retired. And he's not gallivanting around the world. He's just comfortably retired. Now, here's what's interesting. What if we apply these same numbers to the future? In another 40 years, bread will be $10. Now, how many think that sounds ridiculous? Sound ridiculous? But what do you think your parents would have said if you said, oh, bread's going to be $2.50, and cars are going to be $25,000, and your houses, you're going to be paying $250,000? They would have said, that's ridiculous.
They do say it's ridiculous.
Well, and the truth is, it is ridiculous, and it has to do with some other things, but it's just a reality we have to deal with, whether or not it just is what it is. Cars, you'll be paying $100,000 for your average car. You know, it's funny, I was just looking at my neighbor, and he had a BMW and a Porsche. He has $100,000 of cars in his driveway. And those are higher than average, obviously. Those same cars will be worth, $200,000 a piece in the future. To buy a Porsche, that's what we would be spending. Houses, the average house will be about $1 million. So, just a little startup. And to retire, you'll have to have somewhere around $3 million, just to retire average, so you don't have to move in with your kids. Now, those numbers seem crazy, but this is why it's so important to keep up with inflation. There's only really a couple of realistic ways to keep up with inflation, and that is to be somehow attached into the market. The secret is how to be attached to the market without risking your whole retirement. Here's another quick example. I'll get through this real fast.